All right, so we're going to be continuing on with our introduction to the accounting. So we got to take a look at the 5 different types of business organizations. So now we're going to be introducing you to the types of business activities. So there are 3 types of business activities. Pretty straightforward, right? We have service companies, okay? We have merchandising companies, and we have manufacturing companies. So these 3 types of business activities kind of gives you the idea of how a business can be created, right? If you sell a service, which is an idea, right? You can basically these type of companies, right, that provide services, right, pretty much entails with kind of like labor, right? You have an individual that spends time to provide a service for you, and most of these services aren't dealing with selling a product to you, but they are providing some kind of help, right? So a good example would be like an accounting firm, right? They help you file your taxes, or even lawyers, right? They help you provide service to you to fight the law for you, all right? Or even cable companies, right? They just simply provide television for you. So these are going to be considered a service type of company, which is very common that we have here, right? A lot of in Vegas most of the idea here in Vegas is that it is primarily service, right? We have the service at the hotel, right? You have the maid services. You have even like cocktails waitresses, right? Those are service because they serve drinks to you. So that's definitely more common here in Vegas. Okay. However, for this class, we are going to be mainly focusing on merchandising companies. Okay, which pretty much is pretty straightforward, right? They take a product that's already been made. So this is merchandising, right? And they just resell it to the public. So typical kind of these companies are retail stores or even wholesale stores. So once again, a retail store could be anything, such as a grocery store, a boutique, right? One of those type of small things that sell goods or provide some kind of product to you, right? And once again, our main focus here is that we are going to be looking at a merchandising type of company because we're going to be dealing with sales and how to purchase inventory, all right? But so here is when we sell a good, all right, to an individual that's, a product that a consumer would like. So again, grocery stores. Now again, wholesalers are usually they sell goods in large quantities or in bulk, right? Good example is Costco, right? Of course, with this one, it's more cost driven, right? The more that you buy in large quantities, the lower the price is per unit versus going to a retail store or that, you buy the product but individually, right? It's a lot more, it's not as expensive, but if you were to buy a bunch of them, then the cost would definitely be a little more expensive than it is to just go ahead and buy in bulk. So those are the 2 types of retail types of companies that exist here, right? Pretty common. And we're going to take a look at how we sell a product by purchasing inventory and finding out what it costs us in order to sell the item. Okay. And then last but not least, manufacturing companies. So again, anything that creates the product itself, excuse me. So in financial accounting, right? We only learn the basics of pretty much retail type of company, right? If you want to learn more about how a manufacturing company does their financials, that's going to be considered cost accounting or managerial accounting, where you actually break down the product based on the raw materials, the labor that it takes to create the product, and so on and so forth, and how by lowering the cost of labor or lowering the cost of materials, right? How you're able to produce the product and sell it out to either the retail stores or even to the public itself directly. So once again, manufacturing companies do exist. However, this one is, again, is another layer to accounting. So in this case, we're looking at just the very basics of just selling a product itself, right? As you go further down into the accounting, if you're interested in accounting in general, that's where you'll learn the multiple layers of accounting. So you'll learn that there's managerial or even cost accounting, and that's what this right here is where you actually are focusing on manufacturing types of companies, right? So again, manufacturing type of companies are companies that build their own products. So you could think of like car dealerships like Ford. They have the manufacturing building here somewhere in the U.S. that produces the car itself. Okay, so those are the 3 types of business activities. Okay, now let's go ahead and dive right into accounting. Well, first off, what is accounting? Accounting is, by definition, the process of analyzing, recording, summarizing, reporting, and reviewing financial information. Okay, so what these financial information does is it's basically understanding how a transaction affects a business, and how does this one business transaction affect how we run a business or how we interpret the idea, right? If we had a sale, therefore we increase our revenues, and therefore we increase our cash flow, because we should be expecting some kind of form of payment when we sell a product. So in other words, to break it down for you to understand how a business transaction actually works is by answering these 5 questions, right? What happened? When did it happen? Why did it happen? And how did it happen? So the who, what, where, when, why, except for the where, is a way that you could break down a transaction and understand. Like, for example, what happened? If you sold something, what happened? You sold something, right? When did it happen? You sold it today. Why did it happen? Because you're in the process, you're a retail store. The customer wanted to buy a product from you. How did it happen? They exchanged money for you for buying the product from you. Okay? So, once again, you can take a transaction and answer these questions, and it will help you understand how this business transaction affects how it affects a business and their financials. And that's the reason why we have accounting, because it's the process of taking a transaction and analyzing it. Okay, now what good is these financial statements? They are good for 2 people. All right, you have your internal users and your external users. Your internal users are going to be the people who are working in your company. So it's definitely good to let your employees or your staff, your members of your company, know how well your business is doing, especially if you guys are working together. So such as the sales manager versus the cost manager versus the profits manager, right? They are all working together to see how a company, right, the transactions that are involved could affect how these users, these internal users, how they can interpret that decision to either maybe market new items or something like that, to create a way to use information to create conclusions, to either make more profits or even to lower more costs. Okay, so there's a lot of decisions and a lot of factors that come from these financial statements that these positions or these internal users can use to make more decisions based upon them. So that's very important that you should know, especially for the company, what standpoint are you at right now? Are you in good standing? Are you going under? Where are you in your situation right now? Okay. And then external users. Now, external users are going to be anyone that's outside the company. Now, this is very important, especially if you are a larger type of company, right? Getting your name out there, having these financial statements. If you can prove that you are doing well in profits, maybe a bank might approve your a bank loan, right? Or maybe a private investor looks at your spreadsheets and look at your profits and say, hey, you look like you're a very profitable type of company. I'm going to invest in you. All right. So that's why it is very important that these financial statements are placed and pieced together after you've recorded on all the things, right? And you create your financial statements. The important is who you're directing this financial statements for. And especially if you're a small company that's looking to be becoming bigger, you definitely want to gear towards your external users, because these people could invest into your company and, make you become bigger than expected, right? Than what you want, right? So once again, that's what financial statements are geared towards, and that's the whole purpose of accounting, is to make sure that the internal users know what they're doing, where they're standing at, and also make it look good for the external users to want to invest into your company. Okay. Now, next thing is going to be talking about the difference between the bookkeeper versus the accountant. Now, in this class, you are here for the one purpose, and the purpose is to become a bookkeeper. Okay? Now, what's the difference between the bookkeeper and the accountant is actually one thing. Now, a bookkeeper, in blatant terms, okay, in very, very simplified terms, they only record business transactions. That's it. That's their only responsibility, their sole responsibility. Okay. The accountant does pretty much everything else, but they can also record business transactions as well. Now, what does the accountant do? They're the one that makes the chart of accounts. They're the one that makes the rules on how to journalize. They're the one that produces the financial statements. They're the one who's analyzing the information and can make conclusions. All right? Where the bookkeeper, their mere job is just to record. So that's the huge difference between the bookkeeper and the accountant. The accountant does everything else, but it can do the bookkeeper's job, but the bookkeeper cannot do the accountant's job, because the only thing that the bookkeeper is, it's being told by the accountant on what to do, how to journalize a transaction, which transaction should journalize, and etc. Okay, so in other words, if you think about it in a chain of command, the bookkeeper is below the accountant. However, in this class, in order for you to understand what the bookkeeper does, I'm going to also teach you to become the accountant. Because here in the accounting world, or the business world, right, you are better off being the accountant, because you can do the bookkeeper's job, but you can also do other jobs too. You could be versatile. Where if I strictly taught you to just become a bookkeeper, you only can just become a bookkeeper for a small company. But here, I want to teach you to become versatile and be able to not only apply for a bookkeeping job, but also apply for the general ledger manager, the general accountant manager, the junior accountant manager, the whatever titles that you can be. I'm going to teach you to be able to be that person that can do everything, versus being stricken to only one task. So that's what this class is for, is to teach you both being the accountant and the bookkeeper. But I need to teach you to become the bookkeeper before you can become the accountant. Okay? So we're going to ease your way throughout the next 15 weeks. We're going to be practicing how to keep track and keep record of a company's books by journalizing, analyzing, and etc. Okay? So any questions in regards to the bookkeeper versus the accountant?
No, not for me.
Okay. All right.
No.
Nope, excuse me.
Isn't it in our best interest to also have a notion so when we see discrepancies or mistakes, we're able to notice them?
Yes, and that's what the accountant can do because the accountant has the upper hand. They're the one that can control how the books look, where the bookkeeper, they can't. So, like I said, I'm teaching you to be both positions because at the end of the day, when you do apply for a job, wherever that you do, I want you to become versatile and be able to apply for any position, not just only strictly just bookkeeping. So, yes, teaching you how to find those errors, find those discrepancies, and be able to manipulate or to change the way it looks. Yes, as the accountant, you're able to do that.
Thank you.
Okay. All right. So we got to take a look at the types of activities, and we got to take a look at the difference between the bookkeeper and the accountant. And once again, I'm going to teach you to become both. All right? So, but let's talk about what the different aspects there are to accounting because accounting is very, very, very broad. Accounting can be split into 5 different areas. Okay? First one is public accounting, which is also known as CPA, which we'll talk about in a second. We have private accounting, we have government accounting, non-profit accounting, and international accounting. All right? So once again, accounting is very, very, very broad. And it's split into these kind of areas, which breaks down even further of which kind of position you guys are going to be applying for. But in this case, this class is geared towards small and private type of companies. All right? So let's go through each and every single one. First one is public accounting. So CPA, known as a certified public accountant, you are required to have a certified public accounting in order to do public accounting. Okay, there are cases where you can be a junior accountant that is training to be certified to be a CPA. But when you really think about it, the core idea of being a certified public accountant is that you are pretty much limited to dealing with publicly traded companies, right? Hence the word public accounting, right? You are going to be running the books for the big corporations. So publicly traded companies. So any corporation, any LLCs, you are going to be focusing on that area. Now you need to have a license in order for you to be able to do that because you need to prove that you are a master of accounting. So this takes lots and lots of practice. You can test out for it. It is very costly. It's about $100 per test, and there's 4 tests involved. Okay, and you do need to retake your test every so many years. Okay, I believe it's every 2 years you have to update your CPA license. Okay, so that's a lot of work and a lot of money, but that's because these are the big boys. These are the big companies, and you definitely do not want to mess up at all. Okay. Now, of course, with those, if you guys heard of the Big Four, right? The Big Four accounting firms. I believe Deloitte is one of them. Ernst and Young, PricewaterhouseCoopers So those are the top three that I know of the top of my head. But those major three big four companies, right? They are responsible to manage every certified, or I'm sorry, every publicly traded company. They are the ones that make the big bucks. They get paid millions of dollars just to do the books for each company. So think about it. Now, how that what kind of criteria or what kind of emphasis that you can have if you are a certified public accountant is three areas. Number one is going to be auditing. Okay, so this is where you go through the whole entire corporation's books and you're going to look through their transactions and you're going to audit them. Meaning, if you go through every transaction and not something is wrong and something doesn't pan out, you're going to have to let the company know, hey, you're missing this piece of information. Where is it? Okay, so auditing, finding, did they properly file their taxes? Did they properly follow the rules of GAAP? Okay, which we'll talk about in chapter 4. Did they properly do this correctly? Is this all the forms that are necessary to file for whatever it is that they need to file for? So again, they're the ones that producing the financial statements at a grander, a larger scale. Because think about it. As a corporation, how many transactions do you think a typical store, so such as Walmart, how many transactions do you think they do a day?
Probably like thousands.
More than thousands, billions, trillions, because Walmart is an overall organization. How many stores do they have across the United States? Think about it, right? If it's trillions, gazillions, whatever you want to call it, as an overall company. But think about it. Every state has a Walmart, right? So in every state, how many Walmarts are in one state? Exactly. So that's why they get paid by the big guys to do this work for them. Okay? So, yes, that is auditing right there. Okay? Second big criteria is going to be the major one, and that is taxation. Okay? Because when we look into employees filing state taxes or sales tax, whatever you, whether it's for the state and the local agencies, right? Filing for federal taxes, right? Because corporations are obligated to file for those taxes, right? They need people to help them file taxes, especially because they're such a grander type of organization. They are probably dealing with taxes probably every week. And we'll take a look about that when we go into looking at employees, right? Employees, a corporation such as Walmart can have billions of employees. So right there, they can collect that money instantly. So they need people to help file for that and make sure that they do file the proper taxes for the proper people, for the proper amounts, and collect that money. Okay? So once again, when we're looking at accounting, we're looking at a grander scale. Corporate level, meaning billions and billions and billions of dollars at this level. Okay? So that's why you need a CPA license to prove that you are a master of accounting, that you understand these rules, especially one of the criteria of certified public accounting is you are going to be tested on ethics. Okay? So with that being said, right, the last criteria is going to be forensic accounting. Forensic accounting is pretty much like it's like investigating, okay? Not investing, investigating. So the one thing about corporations is they are most likely to have a lot of discrepancies or have a lot of errors in their bookkeeping, just because it is so easy to fraud in a corporation. All right. So because they're such a billion dollar company, what is $1,000 to $1 billion company? It's nothing. It could be scrapped around. It could be shoved under the rug or swept under the rug, right? So that is exactly why we need to have a forensic accountant, because this person is going to investigate the company down to the point where they can see potential fraud within the major corporations. Because once again, they are a $1 billion kind of company. They make billion transactions every single day. So they need to make sure that when they file these books, when they file, taxes, that there's no way that this corporation is going to be frauding them. And that's exactly, this right here was created because of Enron. You'd have to have someone that investigates to make sure that these major publicly traded companies are doing the government right. Okay. And I took this class. It's really, really interesting, especially when we have to look at thinking like a fraud. Thinking how it is so easy to just write off that $2,000 loss on a $1 billion company, because that's nothing. That's like scrap change, right? Thinking like that, thinking like a criminal, and how you could just easily pocket that $2,000 is really interesting. And I would definitely recommend forensic accounting if you like that kind of sci-fi, kind of CSI, kind of investigating type of ordeal, because it's really cool how you can see how corrupt a corporation can be, especially the presidents of these companies. Okay, so once again, I would recommend you this. Now, you do still need a CPA, but again, you could take this class without pursuing a CPA yet, because you can learn about it. So I definitely recommend this kind of class if you are interested in that kind of simple thing right there. But at the end of the day, at the end of all of this, all of these positions right here are required for you guys to have a CPA for you to actually practice this out in the real world. Okay, so once again, it's a lot of money and a lot of time and a lot of ethics. Okay, any questions in regards to public accounting?
No.
Okay. Now we could go ahead and move into private accounting. So this is where we belong. All right, we're going to be taking a look at this. Now, of course, in private accounting, we're looking at a smaller type of business. Private, right? Where you're not publicly traded, you're a small type of business that's just trying to, run itself by running its operations, whether you're providing a service or selling a product. Okay, so once again, these are breaking down. Now, you do have the same two in public accounting, but much smaller scale. You do have an audit and you do have taxation, because those are going to be necessary things, right? You need to have someone to audit the business just in case for any thing that you forgot to enter in, right? Because that's usually what happens for smaller businesses, that some transactions could, go unseemly. Like you might miss it, okay? So you do need an audit there. All of this right here, you do not need a CPA license. All of this you could do just fine with just your regular accounting degree, or if you have a certification in accounting, that's all you need, or experience even. You don't need a certification for public accounting, all right? So all of these can be done by just simply taking an accounting class or something like that, okay? We also have tax right here. So again, tax accountants, right? If you are planning to do a tax for smaller companies, you're just going to be looking at what kind of business organization they are and what proper taxes they need to file. So once again, these are just for smaller scales, because a typical small business could only do like maybe 1,000 or 2,000 transactions per day at most. Okay, so that's that right there. Financial accounting is where we belong, right? Is where we're taking the very basics core of accounting, by collecting our source documents, recording, analyzing, and creating financial statements. So once again, this is just so that we can provide a means to measure profitability, or to take a business transaction and create it in a way that we can display the information in a nice, fashionable, readable way. So in this case, like, we're just interpreting the business transaction and seeing how it affects the business. And that's exactly what financial accounting is. Okay. Excuse me. Then we talked about managerial accounting. So we talked about this as part of the different layers of accounting, right? This is also in the accounting spectrum, but this time, instead of looking at a retail store, you're looking at a manufacturing type of company, right? Where you're looking at the small costs it takes to create a product. Okay, so that's where cost is going to be, and you're also going to do managerial. You could do budgetary accounting as well, and then you also have green accounting. So again, for those smaller businesses that kind of involve in environmental friendly ideas, you do need to do some green accounting there. And then we have treasury accounting. So these are typically people that work at the bank, right? So once again, they're just dealing with counting the money all the time and making sure that whatever money goes in and the money goes out, that they properly keep their books. So once again, this is treasury accounting. And then last but not least, you have financial planning and analysis accounting, which once again, it's going to be looking at return on investments. So this is more for investing purposes. Okay, so if your company decides to invest in another company, right, then yes, so that's going to be return on investments. So once again, all of these are going to be part of private accounting because we're looking at a company at a smaller scale, right? We're looking at more mom and pops or even smaller types of business ordeals here. So these are usually what aspects that you can expect to see under private accounting. Okay. Any questions about private accounting?
No.
Okay. So again, our main focus in this class is looking at the very, very, very basics, which is the fundamentals of accounting, which is financial accounting, right? We're going to take a look at this because you need this core class in order for you to understand cost accounting, to understand taxation, to understand auditing, and to understand the rest of the stuff. So right here, this is the very beginning. The backbone of all accounting is financial accounting. Understand how a business works in the first place in order for you to cut the cost, in order for you to file the taxes, etc., etc. Okay. Government accounting. So once again, it's a specialty, right? Because governments, you need to figure out some kind of accounting because this one deals with different factors, right? So in this case, government is like, for example, budgetary, right? You need to know how much money that we're allowed to give somebody, or in this case, for any government agencies. So for example, One Stop, right? Or let me see, what are the other agencies out there? Job Connect. Those are all government funded agencies. So they have a special type of accounting that they have to kind of look into and be able to manage the books there. So other examples that you could do is you could do management again. That's there too. You can do again, agency fund management accounting. So once again, because the money is coming from the government, there's a special way that you have to be able to manage it, such as which taxes are going into this government funded program, right? Is the state that's providing for this agency, or is it the federal, right? There's two ways that this agency can be funded, and you're going to have to manage like which individuals get to take advantage of that opportunity. So again, One Stop is a good example because they are a government funded agency. They are funding individuals like you guys to get the training that you need, and they need the proper accounting to be able to do that. Okay.
So what is the resource management again?
Resource management would just be basically like funding, like what resources do they provide, even like let me see, like One Stop, right? They provide resources such as things to help you get, they fund you for training. That's a resource. They fund you for also employment, job searching. Those are funded by the state and partially the federal, right? To help individuals like you get a job. That's
Okay.
that's an example of
Of
resource.
resource management.
Yes,
Okay.
yes, right? Determining which sections needs the more money, right? The resource management, managing the money between there, saying, okay, well, we'll dedicate $10,000 to training and $5,000 into job searching, etc. Okay. Yes. All right. And then we talked very briefly about nonprofit accounting. Once again, they have special taxes. Okay. Now, what positions or what jobs that are entailed in here are going to be things like budgetary, right? Especially if the flow of income or the flow of the money that's going into these nonprofit organizations are based off of either membership dues or even fundraising, right? With these type of things, right? They are special taxes. So for example, if you're having a fundraiser, right? That's free money that the organization is getting. However, you can't just collect money free off the street. You have to file your taxes properly. And especially if you're budgeting, because once again, you're limited amount of funds that you have in order to dedicate, for example, marketing, right? Marketing flyers, t-shirts, right? Anything that you're trying to market, or if you're holding an event such as the LA AIDS Walk, right? What necessary do you need to, like sections that you need money that's dedicated to that specific section. So once again, that's budgetary accounting, funds management. So again, dealing with what funds you're receiving from, whether it's a contribution from a corporation, whether it's a generous donation from individuals. If it's like if you have a specific day, oh, spread breast cancer awareness month, right? Therefore, we teamed up with a company to collect money for this organization. So once again, those are going to be the typical type of accounting that you'll be dealing with when you're working for a non-profit organization. Okay. And then last but not least, we have international accounting. So in chapter 4, you will learn that there are a set of rules on how we do accounting in the United States. It is completely separate from any other country, believe it or not, right? There's a separate rule for Canada. There's a separate rule for Mexico. There's even a separate rule on the European side, okay? Even the Asian, Central Asian governments, right? They have a completely separate accounting rules and guidelines. So with that, you need to have someone who specializes in international, especially with us, most of the companies that are US founded. Of course, they want to expand to foreign countries. So therefore, if you are doing foreign country businesses, right? You definitely want to make sure that this individual that's working under the international side of things, that they understand what are the foreign policies that are there. What are the rules and the accounting things there? What's the difference between the foreign currencies, right? Because again, conversion is a factor there. Okay, so that's what international accounting does. Is if you expand your business overseas, that's what that is, not the difference between doing accounting overseas versus the United States. This is someone in the profession that's trying to work for a United States company that's expanding overseas. And so there are special rules and guidelines for that particular type of accounting. Okay. Any questions in regards to the 5 areas of accounting?
No.
Okay. So let's talk about financial reports. Okay. So there's a total of 4 that you need to know. All right. The most important one here is going to be your income statement. It is also known as your profit and loss statement. Okay. Pretty straightforward. It tells you whether your company is profitable or not. Now, what determines profitability? It takes all of the revenues and or income, right? Income and revenues are interchangeable. Okay. Income or revenues, way that you generate money. Does it cover all the costs it takes to operate your business, to run your business? So whether your expenses are fixed or variable, right? So we'll talk about expenses later on in chapter 2. You need to be able to generate enough money to cover all the costs it takes to do business. And once you figure that out, you'll get a net operating income. And then you're going to counter that against any non-operating. So if you invest in another company, that's going to be considered other income or non-operating income. Or if you have other expenses that are not pertaining to your company, which we'll talk about non-operating expenses, that's also going to counter against it as well. So once you figure it out, if you have a positive number at the end of the day, you made a profit. If you end up with a negative number, you had a loss. That means for whatever time period that you did your financial statements for, your expenses exceeded the amount that you earned. Okay, so that's how you determine profitability. All right, by taking all the money that you earn and subtracting out all the costs it took you to operate your business, and that's how you determine that. Okay, so once again, this is probably the most important thing that you could statement that you need to know as a financial statement, just because it shows whether your company is profitable or not. It allows you to see how many expenses you've done for example, for the month versus how much money that you've earned for that month. And especially if you invested in advertising, then you would assume that your profits or your revenues should increase because you spent money to advertise yourself. Okay, so once again, this is one of the most important ones, and you need to know that as an accountant, you're responsible to create this financial statement. Okay. The next one is going to be the statement of owner's equity. Now, let me do a tangent real quick. The difference between this statement amongst the other types of entities out there, other organizations, is just the name of the entity. Okay? Corporations is stockholders' equity. For partnerships is partnership equity. Okay? This is owner's equity because we're looking at sole proprietor. You and the business are one. So this is owner's equity, right? LLC is going to be limited liability equity, right? Or limited liability company equity, whatever you want to call it, okay? But yes, based on just what type of organization you are is going to determine what the title is. But in this case, we're just focusing on sole proprietor. So here we're learning owner's equity. So we're looking at what determines equity. Well, equity is actually going to be the value of your company, right? Do not confuse this with real estate equity, Okay? Real estate equity is basically earning profits off of it, right? This is just determining the value of the company. All right? So the value of the company will include any investments that you've put in, any money that you've taken out, and if you choose to reinvest your profits, so if you had an income, then it will increase the value of the company. And that's just what this one is about. We'll take a look at more in depth with these 4 financial statements in chapter 13, but we'll also take a look at them here and there. Okay? And then now we're taking a look at the balance sheet. So once again, the balance sheet is it's going to be based off of the accounting equation, which is going to be your assets will equal your liabilities plus your equity. So in terms, right? Assets is going to be everything that you own. Your liabilities is your liabilities are going to be everything that you owe plus the value of your company. So here you're going the balance sheet here is going to test you. Does your total assets equal everything that you owe plus the value of your company? And that's all the statement is determining. Okay? Last but not least is going to be the statement of cash flows. This one is a tricky statement, all right? Because when we learn the difference between cash basis versus accrual basis, you're going to learn there's a huge difference between them because one of them is dealing with cash and strictly cash only, where accrual basis is theoreticals, right? You will record a sale even if you didn't receive money from the customer, right? Because you have the possibility of them allowing you or allowing your customers to owe you the money. Now, in reality, right, that doesn't mean you received money for it. It just means that you had a sale, but you basically sold the product for free because they owe you money. And again, customers are not obligated to give you the money 100%. So we'll talk about that later on in the course as well when we dive into chapter 10. Okay? But here, right, the statement of cash flows, what it does is if we are usually, when we talk about cash versus accrual basis, if you are a cash basis, then this statement should already be produced for you. Right? But if you're using an accrual basis where you're allowing people to owe you money or you owe other people money, right? Regardless whether you have cash or not, is basically you're going to convert that idea into an actual cash basis and determine how much cash is actually flowing into your company versus how much cash is actually flowing out from your company. So it's taking all of your credit sales and converting it into cash because it's cash that you don't actually have. So in this case, this is more well explained when we dive into chapter 13, where we actually compute the statement of cash flows. But that's the idea here is that we're taking an accrual type of basis of accounting and we're converting it to cash to see how much sales are we really getting that are actually cash basis versus actually so how much cash is actually flowing in versus how much cash is flowing out from the company. What bills are we actually paying or that we paid off with actual cash for? Okay, so that's that idea there. Right. Any questions in regards to the 4 financial statements? Excuse me.
No.
Okay. So we're going to move a little quickly along here. So internal controls. What are internal controls? So once again, internal controls is basically a government kind of way to have some kind of hierarchy system that allows you to prevent from fraud from occurring. So what this idea is that, again, this was created due to the Sarbanes-Oxley Act, which was placed because of that famous company Enron, right? They were a monopoly. They acquired every single major corporation that involved with electricity. And because they were the only ones running the show, they frauded everybody because they, tampered with the electricity. They caused blowouts, electrical blowouts so that they did no power in the city, which caused them to, you know, have more demand for electricity. So they frauded the government to the point where no one was looking at it. They hired somebody to quote unquote cook the books, which meaning they make a nice spreadsheet that looks appealing or looks very clean, but at the very behind the scenes when they cook those books, it's because they're frauding the government. They're taking money from other people and distributing them secretly. Okay?
Doesn't the FCC, I believe, don't they go in and like with Madoff, he was being, the proper procedures were being done overseeing his company, but they never reported anything. And like with Cox Cable right now, it's like they're a monopoly.
Yes, but they're not the only cable provider or whatever they are. I believe they did vertical integration, so they're internet, cable, telephone. Oh, they're everything.
Mm-hmm.
Yeah. So in that case, um, they're still being looked under the government, but they're not the only company that exists, right? We have AT&T that does the same thing. They are in an internet, and they've integrated with other companies that they are part of the television cable provider too. So a lot of these companies, right? You think that they're the only one there. They are acting as if they are a monopoly, but in this case, they're being heavily watched by the federal government. Okay, because just exactly like you said, right? There are companies that can get away with it, but they are heavily looked at by the government. Okay. Now, again, with those kind of those kind of things, they require that you have some kind of internal control. So therefore, you have one person that oversees everybody, right? But as you go down the chain of command, those positions oversee other positions that oversee other positions. So just like this picture right here, right? The president is going to oversee all these individuals. But that means when, for example, payroll happens, right? The HR can write themselves a check because they work for the company, but they can't sign the checks themselves. They have to get the president to sign that check. So therefore, there's two people overseeing one position, right? Of course, the HR can just process the checks and sign them themselves, but that's where the internal control comes into play. Is that you need two people to validate that transaction within the company. So again, if a transaction needs to happen, let's say I need to make a purchase order for paper, right? It will go through the purchasing agency, purchasing manager, which is going to go through the budgeting manager, which is going to go through the president, because the president's going to overall sign that check to validate to the budgeting manager to say yes to the purchasing manager. Okay, so there basically what this entails is that there are more than one hand involving in a transaction, and that's how you prevent fraud. Okay, because back then the president would sign all the checks, right? He would even sign himself a check, and he would be the one that's also sending other people money, okay, for the Enron situation. And no, they can't do that. You need to have more than one hand involved in a transaction to validate it, okay? But then again, the president of the company, right, depending what position you are, right, and depending on what kind of entity you are. If you're a corporation, no. It doesn't go through the president. It goes through the shareholders. They need to make that executive decision to let the executive board or the board of education, board of directors to let them say yes. We validate that you can spend this money. So once again, that's the purpose of internal controls, is to prevent fraud by having multiple people put their hands into one transaction. So that's that. And it's all for the Sarbanes-Oxley Act. Okay. So now we reach the conclusion of chapter 1. Once again, that was a lot of information. And since this is the very first chapter, it is kind of the basics, things that you do need to know. However, here's a little course review here, what we got to take a look at today. So we took a look at what the nature of a business is. We got to look at the 5 different business organizations. Okay. We also got to take a look at what the 3 business activities are, right? The 4 financial statements. We also got to take a look at the difference between the bookkeeper and the accountant. And we also got to take a look at the 5 areas of accounting. Okay? Now, for this class, like I've mentioned before, you are only required to know very, very minimal stuff about this, because a lot of this is information was in it just to let you know pretty much an introduction of what fields of accounting there are and what different types of accounting there is. Okay? So once again, this chapter here is a lot of information, but I'm only going to let you guys know that you will be only tested on sole proprietor, right? And everything that's around sole proprietor. Okay, because once again, we're only looking at accounting in a small scale. So we're going to be looking at private accounting, which is just financial accounting. Okay. Any questions in regards to chapter 1?
No, not for me.
No.
Okay. All right. So then let's go ahead and dive right into the chapter 1 exercises. All right. So this is where you guys can earn your participation points. Okay. So number 1, what is the nature of a business?
What is the nature of a business?
To make a profit.
Yes, make a profit. I'm going to put this in caps because that is true. That is, besides nonprofit, obviously, most companies are there for the purpose of making money. Okay. What else? What is the actual definition of the nature of a business?
Um, Basically, for business, it is to maximize profit,
Good.
and for consumers, it is to maximize savings.
Correct. But what's the actual definition? Like, what makes the nature of a business? What's the ideal?
It's a it's an organization that strives for a profit by providing goods and or services desired by its consumers.
Correct. So again, I'm going to say using resources to provide a good or service, or actually provide a product or service. Okay. And it is to maximize profits. Yes. Okay. Good. Number 2, what are the 5 types of business organizations?
Sole
A sole
proprietorship.
proprietorship. I'm sorry, go ahead.
What was
Yeah,
that?
that's fine. Sole proprietorship.
Yes. Oops.
Um, Partnership,
Good.
corporation, an LLC, and a nonprofit.
Good. Corporation, partnership, non-for-profit, whatever you want to call it, non-for-profit or non-profit, they all mean the same. And you said LLCs. Okay. Let me just finish the first one right here. Sole proprietor. Okay, good. So, can you guys give me examples of each type of business organization?
A sole proprietor is owned by one owner,
Okay, but
so it has pretty much one principal.
mm-hmm.
A
So,
partnership has two or more owners, or
okay,
shared ownership, shared responsibility.
okay, okay. So,
LLC is a hybrid business that
mm-hmm.
blends both elements from both corporation and sole proprietorship.
Okay.
Am I going too fast?
No, 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 no.
So you want an example,
I
kind of like
wanted
a
it
name of
exactly
store or yeah,
correct.
okay. Well, like number one would be like a mom and pop store, like
Excellent.
Jenny's buttons or
Yes, mom and pop shops are typically going to be those smaller sole proprietor kind of ordeal, right? Maybe the mom is the owner of it and the dad works for the company. All right. Mom and pop shops, good. Or just small businesses in general. Yes. Okay. What's a good example of a partnership? Now, there's a lot out there.
like law firms.
Law firms, like, yeah, I don't know any law firms that I can think of off the top of my head, but any example?
What is it, John Lerner and Rogue? I think something like that. The new name.
I don't know how to spell that, but
Oh,
okay.
Turner and
Okay.
Rowe. Yeah.
What was that?
Turner and Rowe, I think it's called.
Turner and Rowe. Yes, they are a law firm, right? Law firm. Yes. Most likely they are an LLP because, especially when you're dealing with the law and their lawyers, you definitely don't want to be liable for anything. So, yes, okay. What about a corporation? I've given many examples.
Cable companies.
Okay, what was that?
The cable companies are corporations, right?
Yes. Can you give me like an exact company that you know?
Yeah, my provider is Century Link.
It's in it. What was that? Century.
Century Link, yeah.
Century Link. I'm not quite sure if they are incorporated or not. They might be an LLC. Century Link. Okay. What's another example? I said two out there.
Coca-Cola.
Coca Cola. Yes, that's an excellent one. Coca Cola.
Target.
Target. Yes. Okay.
Walmart.
Walmart. Yes. Okay. What about a non-profit organization?
Susan
The
G.
animal
Komen.
shelter.
Susan G. Komen, I heard. What else?
The animal shelter.
Yes, Komen. Animal shelter.
How about Goodwill?
Yes, excellent. Goodwill is definitely a good example. Okay. What about LLC? So this one is going to be a little harder to recognize. But do you know any LLCs at the top of your head, or if you want to look it up, that's fine too. Do you know any LLCs that you know at the top of your head?
No.
Trying to
Okay.
think.
So usually they are company names with LLC attached to them. So any company that has that type of name. Now you're gonna be amazed at thinking that you think that these are corporations when you find out when you research them that they are actually limited liability companies. It's gonna be really funny to see how many LLCs exist in the world right now. A lot more than you think versus a corporation, right? You think a lot of these major companies would be corporations, but some of them are actually LLCs instead. So that's why CenturyLink, I'm not quite sure if they are a corporation or not. They may be an LLC. All right. Good job, guys. All right. Number 4. What are the 3 types of business activities?
Service companies.
Service companies, yes.
Merchandising company.
Yes.
Manufacturing.
Yes. Merchandise manufacturing. Good. Right. Number 5. What is accounting?
It's a process of analyzing transactions.
Yes, analyzing. What else do you do besides analyzing?
You record it.
Recording.
Recording. What else?
Summarizing.
Summarizing. Yes. What else?
Gather.
Gather
Gathering. Good. What else?
Um,
and classified.
Yes, you could classify. Yes. Classifying business transactions. Right. So it's you could probably throw in any adjective here and you'd be able to describe accounting. Pretty straightforward, right? Collecting, summarizing, analyzing, interpreting, recording, summarizing. All of those are going to be, but you have to make sure that you know what are you summarizing. Business transactions. Okay, good. All right, number 6. Okay, what are the types or what are the 5 areas of accounting?
public
Taxes.
accounting.
Okay, taxes could be both public or private. So good. Public. What was it?
Government.
Government.
Private accounting.
Private accounting.
International
International.
and
And non-for-profit. Good. Let's see. What are the 4 financial statements?
statement of income, state of owner's equity, balance sheet, and statement of cash flow.
Good. Owner's equity, balance sheet, and cash flow. Good. Last but not least, what is the difference between the bookkeeper and the accountant?
Bookkeeper only records business transactions.
Good. Bookkeeper only records business transactions. Okay. What does the accountant do?
They analyze, prepare financial data, and present it in a report.
Good. Analyze and prepare um, financial reports. Oops. Analyze. Good. Right? They also interpret. They also are the ones that instruct the bookkeeper. They also even record business transactions as well. So once again, the accountant can do the bookkeeper's job, but the bookkeeper cannot do the accountant's job. All right, good job, everybody. So I will post the answers to this on the Google Classroom under the same section. Okay, so you guys don't get confused on where to find your stuff. They're all going to be under the same folder. So in this case, you'll find it in the chapter 1 through 4 folder. So other than that, once again,